Welcome once again to our webinar on the implications of the Finance Act 2021 on the education sector in Nigeria. My name is Babatunde Adedigba. I'm a senior manager in PwC, and I'll be anchoring this session. Our presenter is Kenneth Erikume. Kenneth is a PwC partner. He heads the Tax Reporting and Strategy Unit for West Africa, for PwC. He has experience advising several companies across different industries in Nigeria and in West Africa. I will also be supported by Yetunde Fadipe, who is the manager in PwC. She'll be helping to anchor, in particular, the Q&A session. This session, we expect the presentation to last for about 30 to 35 minutes, after which we will take the questions and answers session. During the course of the presentation, we know that some of you may have some questions. We would encourage you to include those questions in the chat box, and immediately after the presentation, we'll start taking all those questions. Any questions that we were unable to attend to, mostly because of time constraints, we'll get your contact details and share this with you. So thank you very much for attending once again. We hope this is going to be a very interactive session and educational for you also. So I'll hand over to Kenneth at this point to take it up.
So good morning, everybody, once again. I'll be taking this session. I apologize for the technology challenges. Unfortunately, technology just refused to work today. So if Abiodun can help me project the slides, then we can run through it. The conversation today is on Finance Act 2021 and how it impacts on the educational sector. In the assessment of the United Nations, it's reported that 35% of Nigerian children who attend primary school never make it into secondary school. So, that in terms of statistics shows that there is a significant gap in the educational sector. Out of school children reached 10.5 million as at 2021. And if you've been following the social media, you would see that the Lagos State governor, was publicly discussing the situation of two girls he met on the road who were out of school and were hawking. So that's the sort of challenge we have as a country from an educational perspective. 14.3% of those who are of school age have never attended a school, and that statistic is really dire. Challenges of COVID-19, with lockdown and subsequent restrictions on social interaction, many school children, even though they were able to attend, with the situation of COVID-19, there was disruption in their education. Now, what we have seen now is that with the Finance Act 2021, the government has gone to delete educational activities from the list of exempt companies. The graph on the right shows the interaction of GDP and GDP growth and the expenditure of government on education. So these are just the macro considerations around educational institutions. Okay, So what did the law have before? The law said that ecclesiastical, charitable, and educational institutions of a public character are exempt from tax, insofar as those profits are not earned from a trade or business carried on by those institutions. So if you analyze the law as it was before, it meant that an educational institution, as long as it was of a public character, would be exempt from companies' income tax, as long as it is not generating profits. So this was a bit of a challenge historically, because you had two groups of companies or of educational or schools, if I can categorize it as that. You had schools that were set up for profit, and you had schools that were set up as not for profit. And in terms of the interpretation, generally some schools assumed that they were exempt from tax, even though they were for profit. They were set up for profit. However, precedents have established, what it means to be an educational institution of a public character, and what it means for, such institution to generate profits that will be taxable. The first example is the case between American International School and the FRS, and that was at the tribunal. And in that judgment, the FRS put forward some arguments to say that, the American International School is not of a public character on the basis of the level of fees that were being charged, and on the basis that those fees would actually discriminate and remove some people in the category that could attend the school. And on that basis, FRS argued that it could not have been of a public character. In addition, the argument from the FRS was that, due to the size of the fees that were being charged, even though the entity was set up as not for profit, the profits, the surpluses that were generated by the school should be considered to be from a trade or business. The Tax Appeal Tribunal considered the issues and reached the conclusion that American International School and its fees were of a public character, and that American International School was not generating profits from a trade or business. And how did they reach this conclusion? Number one, while it is clear that not everybody is able to afford the fees of American International School, it was still open to the public. So, they did not cut out any member of the public from attending the school. So it was just simply a function of the fees. Similarly, American International School was not set up with a profit intention. So all the surpluses generated by the school was not distributed to shareholders, was not distributed to investors. It was plowed back into the business of running the school and running it effectively. So that decision went in favor of American International School. Of course, there is another case which is also instructive, which is the case between Best Children International Schools Limited versus the FRS. And that was moved along the chain and was challenged by Best Children International School. But they were set up as a limited liability company. And the same arguments were put forward by the Federal Inland Revenue Service to say that, the fees, will preclude certain members of the public, and also, the company was generating surpluses, and therefore it was generating profits from a trade or business. It was upheld that Best Children International School, and this was a Federal High Court decision, and this issue had gone through the Tax Appeal Tribunal. It was held that Best Children International School was taxable on set up by guarantee profits. So if they generate surpluses, it has to be plowed back for the educational purpose. But for Best Children International School, any surplus will become distributable profits, which can be distributed to the shareholders or investors as profits earned from a trade or business. So, historically, the character, I think the crux of these decisions shows that the character of the school at the time, either it is set up as not-for-profit, which could be limited by guarantee or incorporated trustees, or set up as for-profit, which is a limited liability company, would be instrumental and instructive in determining whether these schools were, for public purposes or, were from a trade or business. Next slide, please. So, Post-Finance Act, what has happened? Or maybe I should just take a step back, just for re-emphasis. The Companies Income Tax Act exempted ecclesiastical, charitable, and educational activities of a public character. The Personal Income Tax Act also has a similar provision: ecclesiastical, charitable, or educational institutions of a public character. Of course, the Value Added Tax Act exempts educational materials and books, whether digital or physical, from VAT. However, the income, I think in conclusion, the income generated from primary, secondary, tertiary educational institutions were therefore not subject to companies' income tax, tertiary education tax, and VAT. Post-Finance Act, what has happened? Finance Act has now deleted from the list educational activities. So ecclesiastical and charitable remains the same in the Companies Income Tax Act, but educational activities, educational institutions have been deleted from the exemption in the Companies Income Tax Act. However, the exemption in the Personal Income Tax Act remains, and the exemption in the Value Added Tax Act remains. So what does that effectively mean? It effectively means that schools that are set up as corporates are no longer exempt from CIT, whether for profit or not for profit. However, there would still be some ambiguities in the law as to whether, when you set up an educational institution as not-for-profit, it could still qualify as a charitable institution and therefore may still be exempt. But that will be a dispute, because clearly the tax authorities will take the view that on the basis that it has been deleted, educational activities have been deleted. Now all schools are now subject to companies' income tax. Now, for sole proprietors, the PIT exemption still remains, but it will be complicated based on the precedents which I analyzed for sole proprietorships and partnerships that are being run as schools to still qualify for the exemption, right? Because if you look at the precedents established in the Best Children International School and the American International School, the nature of partnerships and partnerships, there is no that you can set up the school under. So there could also still be a challenge in claiming the personal income tax exemption. So, I mean, underneath there is just, small companies, if turnover is less than 25 million, medium, if it's between 25 million and 100 million turnover rate. That's the implications. I think we've mentioned all of these things before. There is potentially going to be education tax on top of the company's income tax. There's potentially going to be Nigeria Police Trust Fund applicable on the profits. And of course, if you sell the shares of the school and you generate more than 100 million in any 12 consecutive months, then the gain on the disposal of shares of that educational institution could be subject to capital gains tax at 10%. There are also moves by the Federal Inland Revenue Service to deploy technology to monitor all taxpayers, not just educational institutions. Next slide. So, I mean, the implication from a business registration perspective, so you could have different sort of entities to set up your school. It could be a limited liability company, using the precedent of best children, that would be taxable. You could use limited partnerships, based on Personal Income Tax Act, it could be exempt, but but there's also that question of whether you can set up a limited partnership without a profit orientation. You could use a limited liability partnership, which is a new entity structure that has not really tested in terms of the fiscal or tax outcomes. You could use a business name, which would be in the same shoes as limited partnerships. There's still that exemption in the Personal Income Tax Act, but there are questions around whether a business name can actually run without doing business. And then you could set up as an incorporated trustees, which is not for profit, or a company limited by guarantee, which is not for profit. Institutions continue to claim exemption table. Next slide. So this is just, a survey we've done on in a small sample size. So this is not indicative of the overall population, but we just, secondary schools set up as incorporated trustees, which means that their status registered, would they be considered as being public, and would they be these? So let's just go to the next slide. So what are the obligations you now need to look at? A corporate will need to look at company's income tax at 30% or 20%, depending on the size of the company, or 0% if the school fees, the total annual school fees is less than 25 million, which is unlikely. And then if it's a partnership, or if it's a business name, it will be subject to personal income tax, which rate is not more than 18.96%. There'll be tertiary education tax for corporates, which is now at 2.5% of assessable profit. There'll be the Nigerian Police Trust Fund of 0.005% of net profit. There's the CGT on disposal of shares. There's VAT on purchases, but on the output of the school, there's still no VAT. And then you also need to think about withholding tax on supplies by your vendors. Now, if you have a school that has related party transactions. So where you have a school maybe, and there's another related entity that rents property to the school or things like that, there could be transfer pricing implications. So those transfer pricing implications would require that they would file TP returns, disclosure, and declaration. Abiodun, there's something covering the screen, so press escape. And then you need to prepare transfer pricing documentation. Failure to comply could attract significant penalties, estimated at least 30 million per annum. So this is another thing if you have related party transactions. So, from PwC's perspective, there are several things we can do. Accounting services, which is, cleaning up your books, looking for ERP or software, accounting software to ensure that you have good records of your income and expenditure. Because now the tax authorities may be looking at schools to carry out audits. Of course, you also need to look at having those books audited. You have to look at your tax compliance. Investment in schools is also, big, both digital and traditional media. And therefore, preparing for potential investments or raising capital is important. Even approaching the banks and having that, health check and due diligence reports to show your status could be useful. You also need to check do an impact analysis of these provisions on your business, and also look at, seeking advice where necessary. So thank you very much. I think now we will take questions or comments and contributions, and I'll hand over back to my colleague, Yetunde, to take over the session. Thank you.
Thank you very much, Kenneth. Very insightful session indeed. Please remember that you can put your questions in the chat box, or you can raise your hand if you have any specific questions. We're happy to answer them right now. So Kenneth, obviously one thing that is burning in the minds of many participants and many schools right now is, was this really the intention of the government, really, right, to tax educational institutions? Remember, you talked about the fact that so many children are out of school and all of that. So really, was it the intention of the government to subject educational activities to CIT?
Yeah, so thank you very much for that, Yetunde. I think I can't really speak to the intention of government or what motivated this change. But I can tell you that the history is instructive on the direction that the government, or at least the FRS, has tried to take. They've obviously tried to, even when the law had educational institutions of a public character, they tried to collect taxes from American International School, Best Children School, and I'm sure they've approached other high-profile schools to actually seek for taxes in the past, even when the law had that exemption. So clearly, there was a clear objective of taxing schools by the FRS in the past. So that is FRS, but you know that there are several arms of government and several ministries. I'm very sure that in terms of the direction, the policy direction, if this was holistically considered, that if the Ministry of Education was carried along on these conversations, they would have clearly put forward some arguments not to remove that exemption, because there's a clear gap. There's a clear gap in terms of what government can feel in terms of demand for education, and the public schools cannot meet that demand. And then there's the gap in terms of quality. So even the schools that the government provides in terms of quality cannot provide the high quality that certain sectors of the society require. And therefore, the private institutions fill that gap. You know, and there are many interventions and investments in the educational sector, both from a digital perspective, in terms of STEM, science, technology, engineering, mathematics, and so on, that, you know, from a national perspective, I think a policy that looks to reverse this decision would make sense. So that's my, you know, 2 cents on the matter.
Thanks, Kenneth. I see a hand up. Solomon, I think you can unmute yourself and ask your question, please. Okay.
So Abraham needs to unmute Solomon.
Okay, while we wait for that to be done, I see a couple of questions already in the chat as well, so I'll just take that.
Okay.
The question says, is there a relief for new schools? Is there a relief for new schools? I imagine the person is saying they're just starting off the schools, so for new schools.
Yeah, okay, so there are some that are, it's not specifically targeted at new schools, but there are some reliefs that you can get from a practical perspective. The first one is that, you know, for most businesses, when they start, they're running at a loss. So the tax law allows you to carry forward those losses in perpetuity. So if you accumulate losses in year 1, 2, 3, you can use those losses to reduce your profit in year 3, year 4, and so on, until the losses that you set off against the profits have been exhausted. So that's one of the things that, one of the reliefs that the law provides for a startup. The second one that the law, you know, allows is there's something called minimum tax. So minimum tax is imposed on companies when the company is loss making, or the tax payable is less than the minimum tax, and it's computed at 0.5% of the turnover, which is the fees and sales or income of the school. So in the first 4 years of commencing business, you know, all companies are exempt from minimum tax. So as a school, you can also get that practical exemption. There could also be possibility, depending on the type of educational institution. And I would think this would be more around if, you know, the medium of delivery is through digital. So you could also benefit from what we call pioneer status if your business model is such that your delivery is essentially through a technological platform. So you could approach the Nigeria Investment Promotion Council to get what we call a pioneer certificate, and that gives you an income tax exemption for the first 3 years, and can also be renewed for an additional 2 years. So in total, you can get 5 years exemption. And then for all schools, there's the VAT exemption on all, you know, books, materials, and even the school fees that schools enjoy in perpetuity. Thank you.
Thank you, Kenneth. Abraham, are you able to unmute Solomon now?
Yes, I've asked him to unmute. Hello,
Okay.
I can see you unmute. Yours.
Hello, good morning.
Good morning. We can hear you.
Cycle webinar. So as a follow-up to Yetunde's comments with regard to the intention of governments on this new finance act. So what is the way forward for educational institutions with regard to this current act? Because it has been enacted, there's little or nothing that we can do as of today. We just have to be guided by its implications. So what value propositions can be put forward to have this this act reversed to suit or to meet up with the goals of education? There are certain institutions that will be limited to switch their incorporation, modus of incorporation in cases where they have imported equities or maybe they have external investors on their board. So you just have to work as a limited liability or you're limited by shares. So what value proposition can we put forward? Thank you.
All right, thank you very much. So when the school is set up as a profit-oriented concern, where you have a foreign investor that expects it to be so, and so on, there is nothing you can do. So that has to operate like every other business out there. So a preference will not be given to a profit-oriented business from another profit-oriented business, that an investor puts money and wants to get money out, and therefore government should tax it. That is sound fiscal policy, right? Even though there is some value that service is providing to society. Remember that everything provided by business is trying to solve a problem. So including, delivery business, laundry business, they are all solving problems, right? So when there's a profit orientation, there's nothing you can do because that's sound fiscal policy. Now, the one I think an intervention needs to happen on is when the company or the school has been set up as not for profit. That's an incorporated trustees or limited by guarantee. For those guys, they have no intention of distributing any profit. In fact, they plow back their profits and use it sometimes to grant scholarships, to expand, interventions, to do outreaches, and so on and so forth. So for those guys, I think there are two things they can do. The first one is to look at their setup and their structure and see whether they can move themselves into the bucket of charitable. Because charitable institutions are still exempt from income tax. In some jurisdictions, there are clear definitions of what constitutes a charitable organization. A charitable organization could include anything that has been set up for philanthropy or for social purposes. So this is what some social organizations that have been set up will still get exemption under, even though they are not educational. They could still argue that they are charitable in nature. And I'll give you an example. An example could be Ikoyi Club, for example, right? Ikoyi Club is not doing philanthropy, but it is serving a social purpose. It's serving a social need. And on that basis, they could still claim that, or they should claim that they are exempt from tax because they are not set up for profit purposes. Okay, so it is still possible for a school to structure itself in that way and say, I am a charitable organization, but that would require, a sophisticated and robust review of the activities of that school, because remember that the FRS will believe that based on this amendment, they should be able to collect income tax. And you, after undergoing that restructuring, you want to take the view that you're not being subject to income tax, there's going to be a dispute. So it means that all your documentation, all your structure needs to be, 100% in order to be able to avoid losing out when there's a litigation. So that's the first option available to those not-for-profit schools. Okay. Of course, it comes with disputes because the FRS will believe that they are still entitled to collect taxes. The other option is to say, can we come together as a group of not-for-profit schools and engage the Ministry of Education, and perhaps maybe not just not-for-profit schools, even for-profit schools, and say, can we have a conversation in coming up with a proper fiscal regime for the educational sector as a whole? So for the not-for-profit to say, those guys grant them full exemption, and then for the for-profits, considering that education is one of those things that is not, serves a significant social purpose and requires significant investment to deliver quality, with pressure on fees. Can we have a reduced rate for the taxation of the for-profit schools? So a total package, or recommendation, but that will depend on what the data is telling us. So a sort of advocacy as a sector to the government, taking your ministry along, going to the Ministry of Finance, and having, painting a picture after doing a proper analysis of the economic data, economic and social data, and saying this is perhaps the direction we should go from a fiscal policy perspective for the educational sector. So that is the second option available to schools.
Thanks, Kenneth. Thank you very much. In fact, and there's a question that is very similar to what you have discussed. The person is asking, given all of this, is it possible to change your registration status from a limited liability company to a limited liability partnership, just as a trial to see how you can probably mitigate the low risk, the taxes? So I think the concern is, what are the tax implications of trying to make that switch at this time?
Yeah, conversion is also possible. I'm not so sure that the limited partnership or the registered business name will provide you 100% protection, but it will drop the rate. It will drop the rate from upwards of 32% to about 18.96% maximum, right? And maybe you can also argue that it is of a public character with the state tax authorities. But even if the state tax authorities win, your tax rate will not exceed 18.96% compared to if it is a corporate where the tax rate is 32% or more. So, it obviously makes sense to restructure. So if I were sitting on your side, I would probably restructure if I don't have the option that, we spoke about initially. I guess to switch from a limited liability company or a limited liability partnership to an ordinary general partnership or a registered business name in your capacity as an individual, it would require you to liquidate the existing company and then go and register a business name separately. And that can be done. It's just a matter of following the process for liquidation. Are there any tax consequences for liquidation? Not material. If there is a profit after you do your liquidation accounts, there is an exemption in the Companies Income Tax Act for profits that are distributed in a liquidation scenario, as long as they are capital in nature. So I believe that a restructuring is also possible.
Thank you very much. So someone is also asking, do we have to charge parents withholding tax now?
No. So you don't need to charge. You don't need to charge, withholding tax on your invoice, right? You also do not need to charge VAT on your school fees, but you need to assess whether you need to charge VAT on other services provided by the school. For example, if you provide school bus and you charge a fee for that, that will not qualify for the VAT exemption under the VAT Act, which is for educational materials, school fees, and educational books. It's not going to cover that. So you would essentially be required to charge VAT on school fees, on school bus fees, charge VAT on rental of your, I think that is now exempt under the VAT Act. So I was going to say rental of property, but you don't need to charge VAT on rental of property. But any fees, that you're earning outside education, like school bus, swimming class, swimming class, you could say it's educational also, and argue that. But there are other things, services that you could provide that one could say is not educational. The only one I can remember now is school bus. But Yetunde, I don't know if you can remember anyone because of your experience from school.
Yes, so I would say maybe lunch as well. That's also another.
Yeah. School lunch. Yeah.
Yes.
Yeah.
And sale of uniforms.
Absolutely. Yeah. Yeah.
Okay. So someone is asking, please, if a school is on payee, do we still have to pay companies income tax?
So is the school on payee, or it is the school employees that are on payee? I will need that clarification.
So I think
because a school cannot be under payee, a school will be on personal income tax, because the school is a business, not an individual. So you cannot deduct payee from the school. So you'll be paying personal income tax on the school, but that means the school is registered as a business name, right? That's when the school will do personal income tax. But if the school has employees, then the school is different from the employees. So just the way, a church is different from the church employees, right? In a church structure, the church qualifies as ecclesiastical. So the church will be exempt from income tax. But the salary paid to the pastor, the salaries paid to the staff will be subject to payee. Now, for schools, the exemption no longer exists. So it means that the school will be subject to companies' income tax if it's a corporate, and then its employees earning income separately will still be subject to pay as you earn. So that's my response to that.
Thanks, Ken. So another question here, I've got loads of questions for you. If the school is set up as a digital for-profit, can one still apply for a pioneer certificate?
Yeah, you can, but the pioneer certificate comes with justification and review by the NIPC. So it's not to say that, oh, you are just using Zoom to deliver lessons, and therefore it is now digital. You would need to be able to demonstrate a robust technology driving your delivery of education. And if you're able to do that, then potentially you can get the Pioneer certificate. But there's also another thing that you need to know about Pioneer certificate. You can only apply for Pioneer certificate for an entity within 12 months of commencing business. So it's as the name implies, it is Pioneer and also applicable to new companies or new businesses. So you need to also be able to demonstrate that you just started that business recently, within the last 12 months. So after 12 months of commencing, you no longer qualify to get the Pioneer certificate. Next question.
Okay, the next question is asking around transfer pricing. So it says, can you please explain related party transactions and transfer pricing for a school?
Okay, so transfer pricing is price at which goods and services are sold from one party to another. When the parties are related, party A and party B, right? Then government is interested in the price that party A is selling to party B. And the reason for that is that party A could have a special tax rate or special incentive that allows it to have a reduced tax consequence. And then party B has a high tax consequence. So it will make sense for party B in that scenario to divert profits to the low tax entity. Okay, so government is interested in the pricing between those related parties because the related parties have influence over themselves. I can't remember how many times I've tried to sell something to my wife, and at the end of the day, she doesn't pay, because we are related parties. So, effectively, she will say my money is our money and so on and so forth. So that's simply the idea. So when you have two related companies, then they could influence the pricing between themselves and divert profits to a low tax entity. So what transfer pricing seeks to do is to ensure that transactions between related parties are at arm's length. So if you have a school, right, in one entity owned by, let's assume I own a school, and then I own a property company. So the property is in the company, and I rent the property to the school. Yeah. If I have tax losses in the company that has the property, I would want to charge more rent than possible so that I can take the profits out of the school. So so on that basis, government requires that you show or demonstrate to them that the pricing between that property company and the school is at arm's length. Arm's length simply means what you will get from a party that is not related. So if you went to another property company that has a similar property to rent to the school, will they charge the same thing that you have charged as a related party? So that is what we call transfer pricing documentation. And then you also need to file returns. Remember, let me just give you one of the reasons why government will be looking at this. I use the situation of a property company, but remember that schools are controlled by proprietors, right? So let's assume that it's a company set up as for profit, and then I am the proprietor. I would want to charge a salary that is significant. Since I've heard that you're going to subject this thing to company's income tax at 30% or 32% or more, I want to now charge a very huge salary. Let's assume, my salary should be 50 million. I would want to charge 150 million because the tax when it comes to me as an individual, cannot be more than 18.96%. So I will move the tax that I'm supposed to pay from 30% to 18.96% by charging a significant salary. So government will be interested in transfer pricing for schools on that basis. Next question.
Okay, so it's exactly 11 o'clock. I will just one question, and then we can wrap up. But just as a reminder to all participants, we will take note of your questions. We will send you these questions and our responses in as an email alongside with the recording, so that you can always refer back to it at any point in time. So this question says, if my supplier charges me withholding tax on payment for services, can I use that to offset my tax exposure and liability?
Sorry, take that again.
If my supplier charges me withholding tax on payment for services, can I use that to offset my tax exposure and liability?
No, you cannot. And, you know, one of the things I would recommend as a fallout of this conversation is, we need more capacity development around tax and business for schools generally, because what I see is that there is a gap in terms of understanding of VAT, withholding tax, and things like that. So maybe we can look at another session where we are pulling together different schools and the people in charge of accounting and tax in those schools, and then we have a conversation around operational taxes. So we can do that because it's going to be a bit complicated to explain this in a short period of time. Thank you.
Thank you very much, Kenneth. Thank you for your time. Thank you to all the participants. I'll hand over now to Babatunde to just round us off, and then we will be communicating with you subsequently. Thank you.
Thank you very much, Yetunde. Thank you very much again, Kenneth. And thanks to all the attendees for giving us your time, and all those participated and also asked us questions. So for those that we could not take their questions during the session, like Yetunde has mentioned, we will get your contact details and share both the recording and also the response to your questions. And of course, you have our contact details, and if you require any more engagement from us, you can contact us and we'll be happy to discuss with you. So have a great day and have a great weekend, everybody. Goodbye.